Today marks an earth-shattering moment in financial history. Congress officially passed 3 new laws that legitimize crypto on a grand scale. They regulate stablecoins, define token rules, and ban a centralized digital dollar. This is not a small step. It's a leap into a future where digital assets hold real legal power and everyday financial systems begin weaving crypto into their core. With this foundation, investors finally have the confidence to treat digital currencies as long-term assets, not speculative novelties. Markets reacted instantly. Bitcoin briefly jumped above 125K, Ethereum climbed to a multi-week high, and mid-cap altcoins like Solana, Chainlink, and Avalanche surged. This isn't random volatility, it reflects a strategic capital shift. Politicians offering clarity send a clear message. Crypto's no longer fringe, but structural. When this kind of momentum meets liquidity, we see history being written in real time. Legacy banks are responding fast. Major U.S. financial institutions have announced plans for their own stablecoin initiatives under the new regulation. This means your next paycheck, mortgage payment, or utility bill could flow through blockchain networks. The result? Faster, cheaper, more transparent transactions for millions of people, plus a monumental disruption to traditional payment giants. Simultaneously, decentralized finance is thriving. User activity across DeFi platforms surged, with billions locking in across lending, staking, and yield vaults. This isn't hype, it's practical utility. Real people are earning interest, borrowing, and transacting without intermediaries. It's a revolution in trust, transparency, and financial autonomy. Global markets are synchronizing. Europe and G20 nations are now aligning regulations to follow the US crypto framework, creating the first global standard for digital assets. This makes it easier for developers, businesses, and investors to operate seamlessly across borders. No more fragmented regulation. Today marks a step toward global financial integration powered by digital tokens. BlackRock quietly increased its Bitcoin holdings through its ETF, signaling conviction at the highest institutional levels. When the world's largest asset manager acts, the world watches. This buys time for pensions, endowments, and sovereign funds to evaluate digital assets seriously. Bitcoin is becoming a structural macro asset, not just a market trend. Coinbase broke user records after launching a new on-chain wallet, giving millions seamless access to NFTs, DeFi, and Layer 2 apps. This gateway reflects a shift. Mainstream fintech experience meets decentralized utility. It's not just adoption, it's onboarding at scale. Major tech players are joining too. Apple and PayPal are piloting tokenized payments inside everyday products, preparing for real-world usage by the end of the year. Soon, blockchain-based money could be part of daily life, without you even noticing. Faster checkouts, lower fees, instant transfers. Crypto's silent revolution is underway. Geopolitics is reshaping finance. BRICS nations are testing a shared digital currency for trade that bypasses the dollar. This is more than a press release. It's a global pivot toward financial multipolarity. International trade may soon operate across national boundaries with new digital rails. Meanwhile, persistent inflation in Europe and the UK is pushing up bond yields, encouraging investors to position for digital hedges. As fiat currency loses value, scarcity and code-based assets gain attention. Decentralized money is becoming a shield in turbulent economic times. The SEC faces internal heat after leaks show disagreement over Ethereum's classification. This division between treating ETH as a commodity or security may define its future. Regulatory chaos could disrupt markets, but clarity on ETH could also vault it into lasting institutional legitimacy. Solana's infrastructure is also advancing. Its IoT-powered network passed 100,000 hotspots using tokenized data for real-world devices. The machine economy on blockchain isn't science fiction, it's happening now. Solana is emerging as the backbone for these next-gen systems. In Asia, SoftBank confirmed investment into AI-powered crypto startups focused on automated trading. These wormhole bots combine macro analytics with autonomous execution, promising hedge fund-level performance without human overhead. Crypto is heading toward algorithmic autonomy. NFT gaming is back. Ubisoft and Sega announced blockchain-integrated game economies, offering real ownership through NFTs, with billions in expected revenue next year. These first movers signal a gaming revolution where players influence economies, build assets, and participate directly. Ripple is quietly launching pilots with Latin American central banks, using XRP for on-demand liquidity and near-instant settlements. With Mexico and Brazil poised for adoption, this could outpace SWIFT and reset how remittances move globally. XRP is positioning itself as more than a token. It's becoming financial infrastructure. Real-world asset tokenization is gaining steam. Billions are now locked in tokenized bonds, RE portfolios, and yield products on Aave, MakerDAO, Ondo, and Centrifuge. This is institutional capital flowing into programmable financial contracts and stable returns. DeFi is transforming finance from speculative to foundational. Kazakhstan officially recognized crypto mining as a legal industry, opening the door for regulated low-cost energy use and global hash power growth. After China's exit, miners are looking for block reward opportunities, and Kazakhstan may become a top 3 global hub. Sovereign mining is reshaping national economies. Ethereum Layer 2 rollups are booming. Systems like Starknet, Base, and ZK Sync exploded in user activity and low-cost transactions. These platforms are doing on-chain lending, gaming, identity, all while reducing mainnet congestion and fees. Ethereum is becoming a programmable settlement layer for the global digital economy. Options markets for Ethereum are showing high volume in $3,200 to $3,500 strike calls, signaling anticipation of sharp moves soon. While spot volatility stays low, derivative demand is rising. This buildup may be the calm before the storm. Smart traders are positioning for major breakouts. Finally, global consumer confidence dropped to its lowest in 2 years due to inflation fears and economic uncertainty. That same day, crypto markets spiked into volatility. This shows digital assets are now a global hedge. They fluctuate with macro sentiment, policy shifts, and geopolitical tension. Crypto is no longer isolated. It's part of the broader financial conversation. This isn't just news, it's a turning point. Crypto is integrating with regulation, global finance, and real-world applications. If you're serious about being ahead, smash that like, hit subscribe, and drop a comment with your biggest takeaway. Today is when the next era of money takes shape. Don't miss being part of it.